Hey, Big Bulls! Since this is the final episode of 2024, we thought we'd do something a little different today. Typically, we pick the biggest news stories from the week, but for this episode, we're going to talk about two big bits from the year gone by and one big thing to keep an eye out for in the next year. Number one, we're going to talk about Reliance Industries' worst year in a decade. Number two, the comeback of PSB stocks. And number three, LG's big IPO bet. So let's dive in. Shares of Reliance Industries could end up in the red this year. It is down nearly 6% in 2024, and the over 40 lakh Reliance shareholders have not seen a negative calendar year in at least a decade. And no, we don't think the mega Ambani wedding distracted them or anything this year, but the past 3 months especially haven't been that kind to the stock. So what's the drag? What's really going on? Okay, today when you hear Reliance, the first thing that probably comes to your mind is Jio. But don't forget its main business, O to C or oils to chemicals. This still makes up nearly half of Reliance Industries' revenue. One way to think about this side of the business is Reliance buying crude oil, refining it, and selling it to others as diesel and other derivatives. That's one part. But unfortunately for Reliance, this core business is facing pressure primarily thanks to China. The country is in the midst of an economic slowdown and demand is weak. So the money and margins Reliance is making from this business has narrowed. Also, stock market expert Sandeep Sabharwal points to something else. He says that Reliance has been promising zero debt for a long time now, but they're adding new businesses, investing more money, and there's no free cash flow from this. I mean, Jio isn't generating free cash flows, and it has had to spend money on 5G expansion. Also, Reliance Retail, which is India's largest organized retailer, went through a dip in revenues when it fell by 3.5% last quarter. So the parent keeps financing all of this and more, and the end result is that zero debt seems to be a mirage in the desert now. Because Reliance's total net debt is rising every year and it's a whopping 1.16 lakh crore rupees now. But wait, there's light at the end of the tunnel. As per brokerage CLSA, everyone's ignoring the new energy business, a 20 gigawatt solar factory to produce the in-demand photovoltaic cells. There's also been a delay here, but the business should begin ops next year and that could be a game changer. After all, China has 90% of control over global solar PV manufacturing, and with Trump coming in and looking to impose tariffs, maybe China's loss could be India's gain, and there comes Reliance as well. Then there's also the hope that 2025 will be the year of the Reliance Retail and Jio IPOs. So that could unlock value. Meanwhile, other analysts say that the risk is worth the reward as Reliance Industries is trading near its bottom and from a valuation perspective is looking attractive. So the only way is up from here. And with an 8% weight in the Nifty 50, index fund investors and its 40 lakh plus direct shareholders will definitely be hoping that these prophecies come true in 2025. Up next, let's talk about the comeback of PSU Banks. The Nifty PSU Bank Index is up 15% this year, while the regular Nifty Bank Index has risen only by 6%. The divergence has narrowed of late, but the trend is clear. PSU Banks have won in 2024, and they won the previous year too. Now, if you zoom out and think about it, this was bound to happen because PSU Banks had a really bad patch starting in 2016. The government had to spend over 3.1 lakh crores in bailout money. They had to merge weak banks with stronger ones. And all this was in a bid to hide their massive bad loan problem where 16% of the loans had gone south. All of that helped. But now the end result is there for everyone to see because the gross non-performing assets or the NPAs of PSUs are only 3.7%. And since 2019, the annual growth in revenues and profits is actually much stronger and faster than private sector banks. And that's why people are going gaga. But wait, how did this actually happen? Well, there was a bailout money for one, but the advantage of PSU banks is that most Indians still trust them, irrespective of what has happened in the past. They believe government backing is a big thing. So as Ambit Capital highlighted earlier this year, PSU banks have been better placed to rack up deposits and then use these deposits to lend to their natural partner, the government-owned entities in India. The government has been spending a lot of money to boost economic growth, and they turn to PSU banks for loans. Over 70% of government-related infra is financed by these banks, so it helps with loan growth too. But can they get a hat trick and beat private banks next year too? Well, it may not be that easy. PSU Bank Index has seen a bit of weakness of late, and analysts in Goldman Sachs and Morgan Stanley think their peak is over. But on the other hand, the folks at Ambit Capital have said that the rally around PSU banks could be a longer-term bull run. I guess we'll have to just wait and see how this theme plays out in 2025. And finally, let's talk about a potential bumper LG IPO that's on the horizon in 2025. Now, we can probably add another MNC to India's stock exchanges next year, and it's a big one at that. South Korea's LG Electronics might end up raising over 15,000 crore rupees to cement its place in the top 5 biggest IPOs ever in this country. And that's hot on the heels of its compatriot Hyundai Motors taking spot as India's largest ever IPO this year. But there's something else in common between the two companies apart from their South Korean roots. Both IPOs are expected to be an offer for sale entirely. This means the owners or promoters of these companies are simply cashing out. They're not raising fresh money. So it's not a case of the companies trying to expand their operations in India. So what is it then, and why should they list in India now? Well, the rumor is that it could be a way to break out of the Korea discount. See, apparently, most of these large South Korean conglomerates are family-run businesses known as chaebols. It means wealth clique in Korean. And they share cozy relations with governments, have a web of opaque structures, often poor corporate governance, and they end up in some scandal or the other of late. So investors are wary of these companies. They don't give them the same valuation as their overseas peers. And this makes it hard for owners to realize the true value from their holdings or even raise capital. That means if they list overseas, they could unlock a better valuation. For instance, Hyundai valued its Indian unit at almost half the valuation at which the parent trades in Korea. And that's quite crazy. Maybe that's what is on LG's mind too. And it'll be interesting to talk about this again when they finally do launch their Indian IPO. And with that, it's a wrap from the Bullseye team for this year. Don't forget to hit that like button and that subscribe button so you know when the next episode drops in 2025. Happy New Year, and we see you next year.